All right. Hey guys, welcome to the webinar. Thank you very much for attending today. I was just turning on live streaming to YouTube. So for those of you that are not on our YouTube channel yet, make sure they check us out on Lumi Wealth on YouTube. That's LUMIWEALTH. Same thing as the company. You search us on YouTube. So we're live there streaming as well. Thank you very much, guys, for joining. We had a fantastic amount of signups. I feel like every single time we do this, we get more and more people. So thank you very much for being here. Really very much appreciate all of your support. And without further ado, what I'm going to do is I'm going to share my screen and get started on our presentation for today. All right. So that's us on YouTube. So again, guys, if you are not yet on YouTube, if you are not following us, this is it right here, Lumi Wealth. Make sure that you follow us on YouTube. We do a lot of these streaming things. We do a lot of free material on there as well. So make sure that you follow us there. All right. So today, what we're going to be showing off is we're going to be showing off our machine learning. This is basically our machine learning course. We have Greg here with us as well. So hello, Greg. We will introduce him formally in a little bit. But obviously, Greg is a very accomplished, very smart individual, and I'll kind of break down his whole background pretty soon. But before we get to that, I'm going to take you through our agenda and talk a little bit about the company and a little bit about essentially this course that we're talking about and kind of what the demo is all about, really, you know. So I'll make sure, I just want to do a quick check-in. Is the internet looking good? Because I know we were looking spotty before. It's good? Okay, great, perfect. Okay, so this is our agenda for today. So as I said, what I'm first going to do is I'm going to take you guys through an introduction. I'm going to be covering the introduction. I'm going to tell you a little bit about our courses and a little bit about our program. Once I'll finish that, I'm going to introduce Greg, and Greg is going to take over from there. He's going to teach you guys a little bit about machine learning and forecasting and why is this such a really exciting, interesting thing to do. This is honestly very, very cool. If you guys see the numbers I've been seeing, this is absolutely incredible. But I'll let Greg talk all about that. Really some cool stuff they could do with machine learning and makes sense. You know, I mean, artificial intelligence, what better use for it than finance? You know, like, I mean, it's definitely a great place to use it. So I hope that you guys are here for that and you guys definitely feel the same way that I am, especially after this presentation, which hopefully you guys will see what I'm thinking as well. Okay, cool. So let's start with the introduction. Okay, so introduction. So who am I? My name is Robert. I'm the CEO of Lumi Wealth. I also teach our algorithmic trading course, right? Which basically teaches you all about, you know, how to actually build trading robots, right? My background is kind of, you know, I've been coding for like 20 plus years, actually managing software teams, got my master's in finance, worked on Wall Street for a while. So that's kind of my background. Greg's background, and actually, you know, I'll introduce him a bit later. Lumi Wealth, what is Lumi Wealth all about? So our company, we are primarily a teaching company. What we do is we teach you basically how to build these trading robots. We're going to be introducing a lot of other courses as well. So we're doing this machine learning course, of course, that we're talking about here. We're going to be doing options trading. We plan on also making a course potentially about helping you get jobs in finance and in banking. So we're going to be producing a lot of things going forward. So again, make sure you follow us on YouTube and get on our mailing list because we'll tell you all about that. But this is the course that we're talking about today. We're talking about the machine learning course, which is absolutely fantastic. And I really do strongly believe in the future of this. Actually, it's already happening. Future of this is the current situation in trading and finance. It's a little bit about the course that we're going to be discussing today. What you can do, the way that you can get to this, you go to lumiwealth.com. On lumiwealth.com, we have basically all of our courses down here near the bottom. There's our algorithmic trading course, machine learning's in the middle. We also do development and consulting if that's something you're interested in. Again, we're adding in a bunch of courses down here as well. So keep an eye out. So basically went here, machine learning for finance and trading. We have several different plans. Self-directed is not available yet for machine learning because we haven't made the live course yet. The self-directed is basically the recordings of the live. This is definitely our most popular plan, which is our live classes. And what we do is essentially it's kind of like this. It's like live over Zoom, except imagine you guys can actually interact with the instructor. So Greg is going to be the one teaching it. Imagine Greg is teaching this incredibly smart individual that is doing some great things for investors. Let me tell you that much. I think they got funded $10 million by Google Ventures and a few other people, Stanford grad, all that sort of thing. Imagine he's the one teaching the course. And, you know, we have a curriculum. We're going to be teaching you basically what's on the curriculum, and I'll walk you through that. Actually, maybe I'll even let Greg walk you through that because he could probably explain better than I can. But keep in mind, because it is a live course, you guys can ask questions. We can modify the course as we're going through it. So that's one of the main benefits of a live course. You could really learn a lot from it. I think really the selling point is much more Greg than just the course material itself, right? This is kind of our price points here. Our live classes are our most popular one, which is the one that you can sign up for. Basically, what I was talking about, listen to Greg and not only just listen to the lectures, but ask him questions. You guys are going to have projects that you're going to work on throughout the course, and you're really going to get to know him very well and kind of like learn from his brain that the great things are in there and the amazing results that he's been getting. That's our main course there, live classes. It's 8 weeks long. It starts on somewhere down here. We have where it starts. It's on the March 30th is when it starts. All right, so we have, down here. So March 30th is the course start date. It goes for 8 weeks long. And it's basically 1 hour per week. And we recommend they spend about 8 to 12 hours per week, basically working on this sort of thing as well. It's every Tuesday, 8 p.m. Eastern, 5 p.m. Pacific. All right, and it's 1 hour per week live over Zoom. These again are different programs here. We just created one new one for you guys just because we've been getting a lot of demand for this, where people want to buy machine learning and algorithmic trading together. So this is our new course bundle. You actually save a lot of money doing this one too. It's brand new, but basically what you do is you get access to the self-directed classes for algorithmic trading, and you get access to live classes for machine learning. And this is just because you guys have been asking for this from us. So we decided to put it up. We made it official. All right. It's a little bit about machine learning, a little bit about the course outcomes. Why is machine learning good for trading? That's, I think Greg will really dive into that quite a bit when he's talking about this. I'll talk about the course curriculum a little bit, but I'll let Greg kind of go through more details. The first part is really the fundamentals of machine learning for finance. So it's not only teaching you about machine learning, but it's also teaching you how to apply all these machine learning principles to the finance world, which is, I think, a very unique offering. You can't really find a lot of these things on the internet, especially from such an accomplished individual live, right? So that's kind of part one. The first 4 weeks, we go through those fundamentals that you can apply to finance. Part two is the first project, which is basically what Greg is going to be showing off to you right now. He's going to be showing you kind of the results of this first project and the amazing things they can potentially do with this. So basically what it is it's creating a machine learning model that runs off of data and will trade automatically for you. All right. And then part three, and this is another one that we had very high demand for, and it makes a lot of sense. Part three is really about, if you guys have been listening to these crazy things happening on Reddit, the GameStops and all that sort of thing, we're going to teach you how to build a bot that can do that sort of thing, where you can read the Reddit forums, you can read the Twitter, for example, Elon Musk is tweeting about something. You can have your algorithm automatically buy that using machine learning. So be listening and reading all these things and automatically be able to trade off that information. So Greg will show you how to do that sort of thing as well. That will be in one of our future webinars where he walks through a little bit of that. But for now, this is the one that we're presenting today. We're presenting you this first project and kind of the outcomes that you get from it. All right, so I've spoken about the live classes. I've spoken about the 2 different projects. You can read more about it here on our website as well, right? And here's a little bit about Greg. Again, very well accomplished CEO of Pika Group. They basically help build machine learning algorithms for a lot of different types of clients. And, they've had like $10 million from Google Ventures and Andreessen Horowitz, Menlo Ventures. I would laugh and say it's harder to get that type of investment than it is to get into Stanford, but Greg's done both. So there you go. Cool. Okay. So that's a little bit about the course. I'll let Greg kind of fill you in on a little bit more of the details. Before we get too much into that, first thing I want to tell you guys, Discord channel. I keep saying this all the time because you guys simply love it. This is our Discord channel. Make sure that you join it. Look, someone's even typing right now. very active. You get to speak to our past and future students. We have a great group here where you can learn from how to build algorithms. We actually just launched a little thing here, one of our channels, where we basically try to link up people that are making algorithms with people that want to invest in algorithms. This is our little channel there where you guys can actually talk about that. And this is just because I've been on the phone with people and they keep asking me for this. So if you guys are looking to either invest in some algorithms that our students have built, or if you are a student and you want to have an algorithm that you want investors for, you could actually go to this channel. So lots of cool stuff on our Discord there. So this is a link there. By the way, this entire presentation is going to be available as a comment on our YouTube, right? So once again, make sure that you join us on YouTube. Once again, youtube.com. Search for Lumi Wealth, LUMIWEALTH, right? Lumi Wealth. Yeah. It's right there. Okay. Make sure you subscribe. You can look through our videos. This is actually the live video right now. You can actually see us there on YouTube. So if you go to the YouTube channel, you can see us there. This live presentation will basically, right after it's done, turn into something that you guys can watch. All right. And we're going to also put in the comments all these slides here. So you'll be able to click on these links and whatnot, right? So make sure they join us on YouTube. Make sure you subscribe to us too, just because we post a lot of stuff on there. Okay, cool. And one more thing before I pass off to Greg, there's gonna be a survey at the end of the webinar. Make sure you guys fill it out so we can keep making these classes better and better for you guys. We got some feedback from last class, and basically we're using that feedback now to make this one even better. We're going to show you some demos. We're going to show you some actual results of some of these trades, right? So wait for it. By the end of the class, Greg will actually show you some of the results that he got using this machine learning algorithm on one particular stock. And it's honestly, when I almost fell out of my chair when he told me results. So it's very cool. Okay, awesome. So I've been talking about him quite a bit already, but just to explain one more time, who is Greg Tanaka? So Greg is based out of San Francisco or the Bay Area, I think Palo Alto specifically. So I think that's where Apple used to be, right? Went to Caltech, went to UC Berkeley. He's now at Stanford, right? So just a couple of nice universities there. He's obviously started his own business as well, Pico Group, which basically builds machine learning algorithms for people, specifically in the investing world. They received $10 million in funding from some of the most prominent investors in the world. I'll be honest with you guys, it's much harder to get investments from these guys than it is to get into Harvard. He's gotten, from, I think it was Andreessen Horowitz, Google Ventures. I forget the other ones. Basically, name all the best VCs in the world, and he's got them as on his term sheet there. So yeah, so let me pass on to Greg, and I'll let you take it away.
Thank you, Robert. I really appreciate that warm introduction. Let me share my screen. Oops, actually, You have to enable a screen share.
Yep, there you go. I'm gonna flip it over here. Okay, there you go.
Okay, here, let me share my screen. Can everyone see my screen?
Yep.
Okay, let me go to presentation mode so you guys can see it bigger. Okay, I think you guys all see my screen, right?
So I just want to mention one more thing, Greg, before I take over. I forgot to mention this. Guys, if you have questions throughout the webinar, you can use the chat or you can use the Q&A to ask questions, right? So we'll be answering questions throughout the whole thing. If it gets a little bit much, maybe we'll move on, because I know last time we had a ton of people asking questions. But please type in the chat, type in a Q&A. We love making this interactive so you guys can actually take part. This is not just a lecture format. We want this to be interactive, right?
Yep. Thank you, Robert. Yeah, I definitely want to encourage people to ask questions. So I have both the chat thing and the Q&A thing going on. So I'm also on the Discord, so I have all three of them here. So hopefully I won't miss it. So I think you guys know enough about me. Let me talk a little bit about what we're trying to do. So in the essence of trading is really essentially making a forecast, right? We're trying to forecast what's going to happen so that we could either, sell high and buy low, or vice versa, right? Buy low and sell high, right? Essentially, there's more nuances than that, but that's at the highest level what we're trying to do. And so the core of trading is actually forecasting. It's forecasting what will happen. Now, a lot of people will use traditional type of indicators, things like RSI, and there's a bunch of other ones out there, Bollinger Bands, and there's a ton of them. There's hundreds of them actually. And a lot of these kind of traditional indicators came out before like you actually had a computer, right? Or before the computer powerful enough to do machine learning. And they're not bad. They're better than nothing, right? So you can see down here RSI for this particular stock TSG, the stars group. You could see, what RSI is saying, and you can see, well, okay, it looks like if you kind of squint your eyes and look at the sideways, that this is saying that the stock's going to go up in the future. And then down here, you can see that it's maybe it's going to kind of break, right? It's not going to continue its ride. So as you can tell, it's a very noisy signal. You could look at this, it's pretty sketchy, right? But this is what a lot of people have been doing, is using this for years, for decades, as these kind of traditional type of indicators. And essentially RSI and all the other type of indicators is a form of a forecast. It's a forecast of how the performance of the stock will be, right? And not bad, but the problem is that they're pretty noisy. A lot of people do it. It's hard to differentiate. It's hard to get the edge, right? Because largely trading is a zero-sum game, so you have to have some sort of edge over someone else in order to actually make money. But this is the core of what trading is about. It's like some sort of forecast as to what will happen. Now, the problem with traditional trading indicators like RSI and others is kind of very, very candlesticks. So you could use whatever kind of mechanism you want. Is that most of the professionals these days use algorithmic trading, right? And a lot of them started using machine learning. And in fact, if you look at the volume of the stock market today, algorithmic trading dominates 80% of the market. And pretty much all the really simple indicator-based trades where like, oh, if the RSI is at this level, then you should buy, or this level you should sell. All the really simple things like that have largely been eliminated decades ago. And so, and not to say you can't make money on it, or that you can't make money on it, today or some money, but it's a lot harder, right? So the analogy I like to use is that it's like finding $100 bills on the ground. You still once in a while will find $100 bills on the ground, but not very common. You're more likely to find pennies on the ground. And so, one of the motivators to do algorithmic trading is, probably it's not worth your time to pick up a penny, but to pick up $100 bill is probably worth it, right? So you could pick up a $100 bill manually, but pennies, you probably want to do that algorithmically, right? You don't want to have to like bend down and pick each one up one by one by one. Doesn't make sense. So that's one issue, is that a lot of the, with the advent of computers and, everyone has like all these hedge funds have programmers. It's like a lot of the really, simple technical analysis type of trading has largely been squeezed out with this kind of algorithmic trading and also the machine learning that people are starting to adopt. The second issue is that the models that are being used to do this kind of trading, like this technical analysis, technical kind of trading, don't really capture complex forecasting patterns. So you could kind of tell how sophisticated a model is, or how complex of a pattern it is, by how many parameters it has, right? And most of these models have 1 or 2 or 3 parameters, like very, very, very low ability to capture a lot of information, right? And so the patterns today that actually make money are ones that are fairly complex, and also generally you're not going to make a ton of money. It's hard to make a killing on these kind of patterns now. I mean, you could get lucky, right? Don't get me wrong. You can certainly get lucky, but to make consistent money is actually pretty hard. So this has given rise to using much more sophisticated kind of models. And this is especially true for individuals, because it's hard to get that edge just by using the traditional, technical analysis type of stuff, candlesticks or whatever you want, Bollinger Bands, that people have been doing for the past few decades. Very, very difficult. So this is the problem with traditional trading indicators. So what is the difference between traditional indicators and machine learning? Well, traditional indicators are really great back when you didn't have much of a computer, right? When you had to calculate some of the stuff by hand, really, really great because it's easy to calculate. It's pretty easy to understand. There's a lot of them are just simple ratios, or just sums of numbers. So it's very, very easy to calculate them. But the problem is that they can't, they're pretty dumb. They're not able to factor in different information. So can't factor in that maybe on Reddit, people are trying to do a short squeeze on GameStop, right? Can't really do that. The other big problem is that they're really popular, right? There's a whole bunch of technical analysis libraries out there. Pretty much every charting program has all these indicators already. People are already watching it like a hawk. And worst of all the institutionals have already programmed a lot of this stuff in to their algorithmic trading and are scooping up all the easy money, right? So there's not a lot left. There's maybe some scraps left for individual investors. So this is the problem with the traditional indicators. The kind of leading edge of where we are right now is machine learning. So machine learning, the downside of it, and the reason why it hasn't really caught on as much until more recently, is that it's computationally complex, right? So rather than just having a few handful of parameters, and what I mean by a parameter is, if you think of like equation of a line, equation of a line is also a model, right? So like y equals mx plus p. That line has two parameters. It has the slope plus the y-intercept, right? That's what I mean by parameters. So while these traditional indicators have like relatively low number of parameters, like less than 10, right? So it doesn't have much capacity to really capture information. These machine learning models can have, easily thousands, tens of thousands, or some of the biggest models out there, like GPT-3, would have like billions of parameters, right? They need like a nuclear power plant to kind of power the electricity to do all the machine learning on it. But more importantly, the really neat thing about this, while they're computationally complex and harder to implement, the really great thing on this is that they're able to factor in lots of different information. And that's kind of what you need today. Because like I said, all the really easy stuff is already kind of done already. So you need that edge. You need to be able to capture in some Wall Street bet people are trying to coordinate a short squeeze, right? Or there's something going on in Twitter, right? So you need to be able to factor in this kind of information in order to be able to kind of get the edge back. So this is definitely the leading edge. A lot of institutionals, even though they know a lot about machine learning, a lot of them actually haven't really haven't adopted machine learning as much as you would think. I mean, there's some really big guys out there like Renaissance and Two Sigma and a bunch of others that have totally embraced it. But some of the traditional Wall Street hedge funds haven't, which is kind of surprising. And some of the reason why is because they are a little bit black box. They're not easily explained. And there's some work around there to make some of these machine learning models more explainable. But this is the difference between like traditional indicators and machine learning. Okay, so what is machine learning? So I've been talking about a lot about what machine learning is. What machine learning is, and this, and the way to understand it is kind of contrasting, what is conventional programming and what is machine learning. So conventional programming, let's say, writing some Python code, is you're taking data, you have some sort of Python script, and it's going to spit out some sort of result, right? So if it's RSI, it's going to do the calculation for RSI and tell you what the RSI is given given the stock pattern, right? The historical stock pattern. So this is traditional conventional programming, and virtually almost, I'll say 99.9% of the things that you see out there, from your spreadsheet to your browser to your email, it's all done with conventional programming. Now, increasingly so, a lot of this, some of this is being done with machine learning. Now, with machine learning, the way it works is the input is the data plus the results, which is interesting. So it's not the program. It's a data plus the results. So you're basically swapping, instead of you're having a program and data, what's happening here is with the data and the results, so like we call this the ground truth, it's going to tell you what kind of program it is. It's going to basically figure out the weights of the parameters of your model, and that's going to be your program. So what's really interesting here is machine learning is actually more analogous to how humans learn, right? So most humans, you don't learn by someone opening up your head and wiring together neurons, right? But that's kind of like what's happening with conventional programming, right? With conventional programming, you're basically telling, the computer, this is exactly what you're going to do. You're telling explicitly what to do. With machine learning, what's happening is it's implicitly learning. It's learning the way you learn, right? The way humans learn. And so it's a pretty fundamental difference between how computers are typically programmed to how machine learning happens, right? So it's more through inference. Now, the reason why this is really interesting is because, like, for some problems, like describing, like to figure out whether a picture is a cat or is it a dog, is really hard to do with conventional programming. You could try to do it with heuristics, and for a long time, people were trying to use heuristics, or expert systems, etc., like to try to figure this out, and really failed. Very brittle. It really failed. But with machine learning, basically, a lot of these kind of problems that are hard to describe, right? So if it's a really concrete problem like 2 + 2, okay, you can do it with conventional programming. But if it's like predicting the value of the stock, 5 minutes in the future, pretty freaking hard. It's actually really hard. Or is the Wall Street bets person trying to encourage a short squeeze or not? That's pretty hard to do conventionally, right? To say, if the person says this, then this must be happening. Not so easy, very fuzzy. So this is where machine learning really excels, is when it's hard to describe how you would solve the problem, right? So if you can't describe it exactly, like with conventional programming, machine learning is a much better way. So this is kind of like the new frontier of um, of algorithmic trading today, is machine learning. So I want to dive into kind of a little bit about like my company. So Robert talked about Pico Group. So Pico Group, and you guys can all go to the website, pico.group. What we do is we write tailored, customized algorithms and in Python, and typically work with day traders who have a strategy in mind and they want to automate it. So we'll write that. We just do that purely on an hourly basis. And the way we actually make money, so we pretty much break even on the consulting part. The way we make money is we host it on the cloud, and I'll give you guys a demo quickly of our service, so you will see that later. We host on the cloud, on Google Cloud, and that's really important because when doing algorithmic trading, you don't want your computer going down. So like Robert and I were talking earlier, and his video is glitching, right? So you don't want that, right? Because if you have like $10,000 in the bank or $50,000 in the bank, and you're trying to trade, you don't want your thing glitching, right? So hosting in the cloud is actually pretty good because it's more reliable and you have a much faster connection. We have a user interface, which also I'll show. And then safeguards. Safeguards are really important because, especially when you use machine learning, is because they are a little bit black box and sometimes random things happen. So you want to fail safe. So if the portfolio drops by X%, you want that kind of stop limit, so to speak. More importantly, we also offer back testing, and this is critical because what you do is you start off by back testing. So what back testing is, you simulate using historical data what had happened, and then you figure out whether that's going to work for you or not, right? Because one algorithm may work well for some certain stock or certain type of trading strategy, but not work for others. So back testing is really important. So we have this, and this is actually critically important in order to I would never suggest someone actually start live trading on a newly built strategy. You want to back test the heck out of it until it's really solid, do some paper trading, and then once you're really sure about it, then you do real trading, right? That's kind of like the process you do. And a lot of the API brokerages out there support that. And then we have a whole suite of machine learning models, and I'll talk more about that. That people usually use as a starting point. So one thing I want to just say is that some things that we're going to talk about going forward. This is historical examples. This is not a promise or a forecast of what you'll get. This is kind of SEC type stuff. So just want to give you the safe harbor here. But what we found is that machine learning based investors typically have pretty good Sharpe ratio. So I don't know if you guys know what Sharpe ratios are, but it's kind of a measure of how performance divided by risk. And so a Sharpe ratio of 3, anything over 2 is pretty damn good. 3 is amazing. So a Sharpe ratio of 3.3 is pretty amazing. And average compounded annual growth rate of 42%. So pretty nice returns, right? I mean, especially considering where interest rates are. I'm not promising this is what you guys are going to be seeing for yourselves, but if you backtest a lot, you do paper trading, you really make sure you have that kind of edge versus the market, something like this could be possible. Okay, so the tools that we'll be using. So if you guys don't know, Alpaca is a really nice, it's actually based kind of near where I am in San Francisco. It's just a few miles north of me in San Mateo. Um, they're kind of like the Robinhood for API trading. So no commission. Their APIs are really clean. I mean, much easier to use than let's say interactive brokers where you have to have your own Java client going on. We use Python 3. Pandas, if you guys don't know, Pandas is the it's kind of like the Excel for Python, right? So you could do a lot of really sophisticated operations, and it's better than Excel because Excel has a certain capacity, and with Pandas you could go like you could have humongous data sets. Um, in this example here, we'll also use the technical analysis library, TA. So all those different type of indicators are all in here, so it's pretty easy. Scikit-learn is a pretty basic machine learning library. And there's much more sophisticated ones out there like TensorFlow, and there's a whole bunch of API-based ones now as well. And I'll talk about that. We use Google Colab. So if you guys haven't discovered Colab, it's one of the best deals out there. It's free, so you could get free compute, which is really nice. And it uses this thing called a Jupyter Notebook. And the reason why Jupyter Notebooks are really important is because unlike with traditional programming, where it's really explicit and you're writing one line of code after another, with machine learning, a lot of what's going on is experiments, right? You're running the same code again and again with different parameters, different type of settings, different types of data. So you're running a heck of a lot of experiments, and running them in Colab or Jupyter Notebook is really nice because it allows you to do experimentation very, very easily. So if you haven't checked out Google Colab, definitely check it out because it's one of the best deals out there. And then Google Cloud Platform. I like Google Cloud Platform because it has really strong, well-developed APIs for machine learning. So you could do really sophisticated kind of AI type stuff that you couldn't do on your own using open source libraries. And the other issue with open source libraries is a lot of them are, they're free, but they also have bugs and they're not well supported. And so I always suggest trying to use one of the pre-baked things versus trying to do something from scratch wherever possible. Okay, so let me go over the code. I'm going to flip to my Colab to kind of show you what we're talking about here. So this is using Alpaca. We're going to be using the Alpaca APIs to get the training data, and then also the test data to validate it against. We're going to train the model. I'm just using something simple, a model called random forest. It's a very basic, it's a very traditional type of basic machine. It's a tree-based machine learning model. And then I'm generating the predictions and show you the analysis of the results. So let me jump to my screen. And then the second part of this is I'm going to show you, once you have the forecast, how to use it to actually do trading. And then I'll be jumping into basically how to use the forecast to do trading and how the system looks on my side at Pika Group. So let me exit out of this and go to the Colab. So this is what Colab looks like. So Colab is, again, free. So this is colab.research.google.com. It's maybe not as good as a deal as it used to be. They actually used to offer more GPU resources, but they've kind of clamped down. But again, it's free. The one problem with Colab is that, like you can see here, if you don't like touch the screen, like ever so often, it logs you out. It doesn't log you out, but it doesn't. You have to kind of restart it again. So that's one downside. So it's really great for interactive experience, not good for running stuff long term. So what you can see here is just the basic requirements, right? So the Panda libraries, datetime math library, JSON. So one of the important ones here is Alpaca. So Alpaca has a really easy to use API. TA is just a technical analysis one. So this is how you get all the technical analysis type of indicators. You have NumPys, which is it's very complements very well to Pandas. And then here you have sklearn. Sklearn, as I mentioned earlier, is a very basic machine learning library. So it has tons of different models in there. So we're going to be using the random forest library. And then I host my credentials in the cloud. So one thing I would always tell everyone is never put your credentials in plain text. So I like to use a secret manager in Google Cloud. So that's why I have this here. This is the kind of authentication. And then, so this is some of the basic setup. And then, I pull the secret from secret manager. And then, basically that's how I get my keys for Alpaca. And then, yeah, so this is how you access Alpaca. So pretty easy. And then, here we're getting into the setup and the training setup and test. So with machine learning, a lot of what you're doing is getting the data in the right shape. So this is over half the battle, is getting the data into a way that the way you think about it is you're like teacher, like you're like the teacher of a school, right? Of a class, and you're trying to give training data to students. That's what you have to think about, right? So the data and the presentation of the data to the model is everything, right? Just as a teacher, what the teacher is their lecture, their the textbooks, they're all, it's like training data for the students, right? So a lot of what machine learning is really the data preparation, getting this kind of in the right kind of format, so the models can actually learn it. So in this case here, what we're doing is we're predicting. So this is the training data. So we're using historical data, let's say June 1st from 2020 to July. So we're using about a month worth of training data so that we could predict in the future. So this is just establishing some of the time things for the model. And then what we're doing here is we're going to get, for this time period, we're going to get basically, oh, sorry, this is where we're getting the data. Sorry, I forgot about that. And then what we're going to do here, and using NumPys, is basically loading all these different type of indicators. So if you look at these indicators like delta, RSI, EMA, etc., these are all really standard indicators that people use traditionally, right? So what this example here is showing is just using traditional indicators as what's called features, as inputs into the machine learning model. You use this to essentially see if the model could help predict what the stock price is going to be in the future, right? So, oh yeah, and by the way, the stock I'm using here is SRNE. I'm just using it because it's a very, very volatile stock. So this is how I get the training data set up. And then in terms of the test data, what I'm basically going to be doing is predicting from July 1st to July 15th, right? And I'm predicting just a few minutes in the future. And that's probably the other thing to think about is a lot of algorithmic trading these days. Most of it is very short-term type of focus, right? You're not forecasting a year in advance. And the way to think about it is when the low amounts of data, like you're trying to predict a year in advance, there's not a lot of data a year in advance. Usually humans are pretty good at doing that. But when there's lots of data, machine learning tends to do a lot better. And that's why short-term tends to be better for machine learning than long-term. So like day trading versus like trading for 10 years in the future. Like 10 years in the future, Warren Buffett's better at that, right? Humans are better at that because they kind of see the overall societal trends, right? So anyways, so we get just like we got the training data set up, we also get the test data set up here. And then here's an example of what you can see what the data looks like, right? So so this is for the stock, this is the close price. You can see it's basically every minute, right? Minute, you can see what the for the rows. So you have the close price, the time of day, Unix time of day. So this is like the Unix timestamp format. And then we want to feed in different variations of the data into the model to help make it learn. And there's actually better ways of doing it. You can do day of week. There's a lot of fancy things you can do. This is kind of like a quick and dirty example here. And then we feed in a bunch of traditional type of technical indicators from the TA library. And so you could see all of the different values as based on the historical price. Now, to train the model is actually pretty simple, right? So we're just basically training, predicting 15 minutes in the future. And what we're doing here is and this is actually something that's really important with forecasting, is you want to forecast, you want to minimize what's called forecast distance. And that means from when you are from let's say, like today is Tuesday, right? So Tuesday, if you're forecasting for tomorrow, Wednesday, is not so bad. But if you're forecasting for next Tuesday or next year, further you go out, harder it is to forecast. So in order to minimize forecast distance, what you want to do is you want to do what's called rolling training, right? So what's happening here is it's forecasting the future, but then it's retraining at each time step, right? So it's basically it's minimizing the forecast distance, and by doing that, you get a lot more accurate forecast. If you're don't update your model, right, and you're increasing the forecast distance, then what's happening is your accuracy is going to drop. So yeah, so it's really important to have this kind of idea of a rolling training period, right, versus a fixed training and then just forecasting the future. But then what happens is if you just have a fixed training, what's happening is your forecast distance increases as you keep going out day by day by day, right? Okay, so the training of the model is pretty easy. It's just literally just one line fit, right? So it's very easy to do. All the work really is, again, getting the data in the right format so the model can learn. So we generate the predictions, and then here's what it looks like when you output it. So what you see here is you see the predicted value right here, and then to see what that looks like in terms of visualizations. So here's a graph. You could see the blue line is the actual ground truth, and then the predicted is the yellow line. And I should probably zoomed in more, but anyways, what you can see here is that it's overall pretty good. Now there's some spaces here because there's weekends and there's times the markets are closed, right? But overall you can see that it kind of matches it pretty well, right? And this is kind of like a time series view of the data. Now, the other aspect is to see what features are the ones. So I put in pretty much, a lot of the common technical analysis features. What was the feature that was most helpful in predicting the future, right? At least for this particular stock, and it would vary for different stocks. In this case, the RSI was a really, really important feature in terms of making this accurate, right? So after you generate the prediction, you want to see like, well, what were the kind of key features? And if there's a feature here that you thought would really be key, maybe the model's not really learning it. So you may have to format it differently. So like for instance, sometimes you have to do what's called one-hot encoding, or you have to do some sort of feature engineering to make this effective. Now, one of the core things you got to do about a model is you got to measure the error. What is the error rate? So there's lots of different error measurements out there. In this example here, I'm just using something called mean squared error, or you can use percentage error. So this is 0.72. So we're only 15 minutes in the future, right? So 0.72% is really low, so less than 1%, but you would expect that when you're only doing 15 minutes in the future, right? It's not too hard to get it off. And mean squared error is pretty low as well. So this is machine learning, right? In terms of forecasting, and having a better forecast than one of the traditional indicators like RSI or one of these other ones out there. Again, I want to encourage anyone who has questions. I'm kind of going fast. I tend to talk really fast in general, but if anyone has questions, just put it on chat or Q&A, and I can answer it. Otherwise, I'll keep on going. So the second part I want to go over now is let me jump back to the presentation. Okay, so now that you have a prediction, right? What do you do with it? So our machine learning model now is spitting out, 15 minutes of future, a forecasted price of the stock. Okay, so actually, someone just asked a question. Could you use this for cryptocurrencies? The answer is yes. In fact, this is one of the fastest growing areas of algorithmic trading is cryptocurrency. In fact, I would almost argue for cryptocurrencies, it's super hard to do it manually, right? So definitely for cryptocurrencies, this is really popular. Absolutely. Good question, Alejandro. So after you have a machine learning model, you want to do something with it, right? So this is about as simple as a trigger. So the way to think about it is there's some sort of forecast model, and this feeds into some sort of execution trigger, right? And what I mean by execution trigger is you got to take some sort of action with this forecast. And there's really sophisticated triggers out there like reinforcement learning type triggers, which are take game theory into the account. And there's really simple triggers like this. And this one here is just simply an if-else statement, right? So Let me go over this, and this is really simple for everyone to understand. So, so if the close price of the stock is less than the predicted times some sort of threshold, right? You want to have some sort of buffer. You don't want to just jitter across, like if they're very close, you want to, because there's a spread between the bid and ask. You don't want to you want to have enough of a difference between the predicted and the close so that it's worth, whatever transaction cost there might be in terms of the bid and ask spread. So what this is saying is that if the close price is less than the predicted times some sort of threshold, right? Then what you do is for a certain amount, right? What you do is you, so this means the predicted is going to be higher than the close. So this means in the future, the price of the stocks is higher than it currently is. So obviously what you want to do is you want to buy, right? So you would buy that, right? You basically buy that. And this is using the syntax of our system. And I'll show you guys how this works in just a minute. You want to buy the stock, right? So you basically buy a certain amount. Now, vice versa, if the close price is lower than the predicted amount times some sort of threshold, right? Then you want to sell, right? So, and then if it's kind of within this band, this threshold band, then you don't do anything. You just kind of hold it, right? So this is a very simple trigger. This is the most basic trigger out there, right? And there's way more sophisticated. There's pair trading, there's martingale, there's a bunch of other triggers out there, but this is about as simple as I could get. So let me show you our system now. So let me go to our system here. Okay. So
hey, Greg, sorry to interrupt you. Just before you continue, there's a couple questions here.
Oh, sure. Okay. Yeah. Let me see here. Okay. Suhas asked, can one use machine learning for longer term predictions? Could this technique have forecasted Tesla stock price over the last year? So theoretically, anything is possible, but like I said, you have to think about who has the advantage. So when there's tons and tons of data, like more data than you could possibly memorize or think about, typically machine learning does a lot better, especially if there's large volumes of structured data or repetitive data type of data. Machine learning just rocks. When there's relatively low amounts of information, and there's not like a lot of training examples. Like for instance, there's only one Tesla out there, right? And it's hard to train on Tesla stock because it's only been around for so long, and so there's not, there's some stocks that have been around for like 50 years, right? So there's a lot more training data. Tesla is a relatively new stock, so there's not as much training data. In fact, this is the bane of time series forecasting. Time series forecasting, the big challenge is, okay, so in general, you want to use high capacity models, like deep learning type models that have lots of parameters. But the problem is models that have lots of parameters, you need a lot of training data. And the problem with time series forecasting is that you can't generate more time. So like a lot of deep learning is used in NLP or computer vision, where you have lots of training examples, right? You can get more pictures of cats and dogs and label them, very easy. With time series forecasting, the big challenge is you can't generate more time. And so that's why a lot of times you can't use really complicated models for the time series forecasting part. You can use it for the NLP part, natural language processing. You can use it for computer vision, but it's hard to use it for the time series forecasting part itself because you're limited to amount of training data. So back to the question of could this have forecasted Tesla stock a year ago? Probably hard, right? Probably relatively hard. Now, if it's oil prices, maybe it's something different because oil prices have been around for a long time, or like something that's been around for long, because you have more time, you have more training data. So for Tesla, that's probably, and Tesla's stock is sky high right now, and it hasn't always been like that. So it's probably a harder thing to do. You could probably use it to do, intraday trading of Tesla. That's probably really good. Like within the same day, that's probably really good. Anand asked, these ML models work only for day trading. Can these models be used to do swing and position trading? Yeah, you can. It doesn't have to be used for. It doesn't have to just be used for just day trading. But basically, the world machine learning rules versus humans again is when there's huge amounts of data where you can't possibly go through all of it as a human, right? Or make sense of it. Machine learning does really well in that. Machine doesn't do well in like you know, Elon's developed a new battery for Tesla, right, for his car or something like that. It's not as good about that. Or, oh, you know, he's doing some sort of AI thing for a self-driving car. It's not as good at that kind of stuff because there's not as much training data. The way you think about it is like the reason why machine learning does really well for computer vision is because you can have almost infinite number of pictures of cats and dogs, and then having the machine learning algorithm like learn that. There's lots of training data. So what maybe for a human takes very little to learn, like a human could learn with 4 or 5 examples, perhaps. Machine learning needs like it's pretty dumb. It needs like tons of examples, like hundreds, if not thousands, or tens of thousands of examples to actually catch on. So that's what you have to think about. Okay, good. But keep those questions going. I'll keep answering them as you guys ask. Okay, so let me jump to this is our portal. So this is so for people that sign up for our service. Again, we do consulting where we build the custom trading algorithm for our customers, and then oftentimes I'll say probably like 99% of the time, our customers would have us host it, right? Host it in the cloud. We use Google, and then we have this interface, and this interface is pretty straightforward. It's actually very mobile friendly. But basically, what you have here is, profile where you have your credentials. There might be some triggers. We have a kind of like a stock screener where you could put in like a big basket of stocks and run all those stocks across your trading strategy to see which one does the best. Because again, trading strategies and forecast algorithms really work well for certain stocks at certain times and not well for others. So it's really hard to find the magic bullet that works for everything. So that's why stock screens are pretty important. This is where you submit jobs. You can see what jobs are scheduled, the live jobs, job history, what is the error threshold, the fail safe, like that, what I talked about, the reporting, different models, etc. So let me jump into it. So I give you guys a demo here. So basically, we support both interactive brokers plus Alpaca. We have some other support for TD Ameritrade, but really out of the box is really Alpaca and interactive brokers. And I would really strongly encourage people to use Alpaca, unless the problem with Alpaca, it doesn't support options and futures and stuff like that. But if you're just trading equities, Alpaca is pretty rock solid. And so we're going to do a back test trade because right now it's the market is closed, and then you could also do what's called bid-ask spreads. You could also factor that into your trades. Just for the sake of time, I'm not going to include that in here, so I'm going to say no. But once you have your model really refined, you want to start adding some realism, which is the bid-ask spread. So even though Alpaca doesn't charge commission, there's still a bid and ask. So there's some small percentage difference, and this starts to add up if you start doing a lot of trades, especially algorithmic trading, where you could do a lot of trades. For the sake of time, I'm not going to do, but again, you would turn this on once you're pretty sure your model is pretty like rock solid. Then you would start turning this on and start running simulations over this. And then how many times do you want the model to be retrained? Typically, you want it to be trained quite frequently, but for the sake of this, in terms of time, I'm not going to turn that on. And then so let me just put in a kind of arbitrary time frame here. So market opens at 6 a.m. Let's see, and then closes at what, 4 o'clock. Okay, I'm going to start with $10,000. And then oops, I can just select Alpaca. Okay, and then we're just going to use a simple trigger. So the simple trigger is literally the one I just showed you here. This is the simple trigger. So very, very simple. But there's actually a lot of other triggers you can use. We have martingale. So martingale is like if you lose on the first trade, you double down, right? And then if you lose on that, you double down again. So it's kind of like the casino thing. You could lose your shirt on this, so you got to be careful. There's pair trading where you're trading like Home Depot and Lowe's, right? So this is more market neutral. You're shorting, you're going long and shorting on them. And then there's like reinforcement learning. So there's lots of different types of trigger, but these other triggers take a lot longer to run and they're more harder to understand. So I'm not going to do them today. And then stock. So I'm going to use SNDL. And so that's just this stock right here. Sundial is kind of a low price stock here. And then this is, back before I talked about, what kind of threshold you want to use. I'm just going to set this back at 2.5%, and then number of shares. So I'm just going to do 3 here, okay? I'm not going to set a maximum position. So as long as the prediction says it is a good buy, like it's predicted to go higher, it'll keep on buying. And as long as it says it should be lower, it'll keep selling, right? Now you can imagine the problem here, but I mean, if it, you could certainly run out of money or run out of margin, right? But I'm not gonna set a maximum position here, and for this sake, I'm not gonna sell. I'm just giving this as a very simple example. And again, if anyone has questions, just feel free to chat them or put on a Q&A. Okay, so I just showed you guys the random forest model. So the random forest model is literally the one I just talked about here. It's the model I'm running is the one that you just saw me run here. So it's the random forest regressor right here. And we're just going to do the same thing I did in the example. We're just do 15 minutes in the future, and we're going to trade every 5 minutes. Okay, so very simple. So I'm going to press save. Oops, time scale. Sorry, minutes. Yeah, so we're going to do minutes, and then save it, and then it kicks it off, right? So now you can see the status here. The brokerage is alpaca. You can see when it's starting. It's running for a couple of days. You can see that it's a simple trigger. You can see the description. You can see the stock, how many shares are going to be traded, what the max position is, the model that's being used, etc. Right? And then yeah, so you can see that the live job it's kicked off the SNDL trade. So that's going to be cranking away. So maybe as that's cranking away, I'm going to jump back to the presentation a little bit. So this is like the cooking show. While things are baking, I'm going to talk a little bit about the course, and certainly you guys can ask me more questions. Okay, so week 1 is going to be kind of introduction, so everyone kind of get to know each other. I think a lot of people build camaraderie. We talk about the course layout and the tools. We talk about what you need to get set up. So we're using Google Cloud. So I would encourage everyone to go to Google and sign up for the free $300 credit. We'll do Q&A. I'll go in week 2. I'll get into like why and what is machine learning in much more gory depth than what I did today. We'll start with the most basic model out there, which is linear regression. We're going to a little bit more ordered random forest. So it's good to get this kind of foundation, and then I'll get into the training process. So again, for a lot of the time series type stuff, it's good to put these things run really fast. Use these basic models. It trains quickly, and you can also understand how to train models, right? So this is kind of like the basic. The week 2 is really the basics, and then week 3 is getting more into deep learning. So I'll get into what is shallow learning versus deep learning, and to make it really short, really easy. Deep learning really is another name for neural networks. That's what most people mean by deep learning. And what's different between shallow learning and deep learning is able to really see very, very fancy patterns versus shallow learning. Shallow learning, its ability to detect complex patterns is much more limited. But like I said, if you don't have lots amount of data, shallow learning is the way to roll. If you have lots of data, deep learning is the way to roll, right? So I'll get into why, what, and when to use deep learning. So that's important because not everything is a deep learning problem. You want to use the right tool for the right problem. And then I'll talk about the training and validating deep learning models. And then we'll get into optimization. So one of the really neat things that's happened over the past couple of years is the whole idea of called AutoML, which is incredibly enabling. So previously, to do machine learning, you had to get a PhD in this stuff, right? But with the advent of AutoML, and especially a lot of the AI platforms out there that have APIs for this stuff, a lot of what used to be out of the reach of mirror modals is now possible, right? So we're going to talk about the optimization. How do we use some of these technologies out there And basically what's happening is they're using machine learning to do machine learning, which is kind of a cool thing. We'll talk about how to um, how to uh, um, uh, how to properly run an experiment sheet. So the way to think about um, machine learning is it's very much like a it's much more of a science than a um, than a engineering problem. So so you gotta be like these like just like in science class you have like a scientific notebook, you log experiments. It's very similar for machine learning as well. So in terms of the first project, let's see, yeah, so it's coming up in in terms of the first project, we're going to be focusing first on time series forecasting because this is the core of everything. So we'll talk about what is time series versus non-time series model differences. We'll talk about the theory, and then the training and validation process, which is actually very different between non-time series type problems. Chris just asked, how familiar should students be to get the most benefits from the course? Or should a lot of the coding be pre-scripted? So I think, Chris, that's a really good question. Knowing Python would be really important, but I think the thing that's kind of neat these days is like things like AutoML. You can actually, there's some AutoML stuff where you could do it without any programming at all, right? So like, for instance, let's say you have like a bunch of Reddit articles and you have like 1,000 Reddit articles, but you don't have time to read all of them. You can actually feed that in without any programming into like Google's AutoML NLP system, and it'll spit out tags for you, right? So there's a lot you can do without programming, but definitely knowing Python is a big plus. The other thing I would say is, we're going to be doing most of our development in Google Colab, which is one of the easiest ways to learn Python. And Python is probably the easiest language to learn. I think it is the most popular language. It's also one of the easiest languages to learn. Very, very forgiving. But good question, Chris.
Greg, I just want to add one more thing to that as well. That's also why we created this bundle plan, where you can take the algorithmic trading course and you could take the machine learning course together. So the algo trading course will actually teach you a lot of the Python, a lot of the fundamentals that you would need for this. Although you said like it's not absolutely necessary. You don't need to be like an incredible coder, but if they were to take the algo trading course, we will teach them that sort of thing as well.
Yeah. Okay. I was just checking out. It's like I feel like a cook. I'm checking on the recipe to see if it's done yet. Anyways, okay. So let me keep on going. So this is kind of giving the foundation. The next part of it is building a stock forecasting model. So it's kind of like the example I showed you, right? So what are the features you want to use, how to measure the error, and how to get the project set up. This is kind of foundational. To actually make money, you're gonna have to kind of think about like what stock you're trying to forecast, what's going on. But this is the basic frameworks of how to do it. So you actually, after week 2, actually have a tangible project that you actually use to do something with it, even to put into a simple trigger and actually start trading on it. So this is kind of a nice deliverable that you'll be able to have. Okay, let's get into the capstone. So what's really cool, as I mentioned earlier, is kind of how all this super advanced machine learning AI stuff has become so much more accessible. It's become so much accessible. There's a bunch of course, open source libraries, but also a lot of the cloud providers have provided really powerful services that you could use to do very sophisticated type of analysis, right? From classifying, classifying, different posts on Reddit or Twitter tweets to sentiment, like are people angry, happy, sad, etc. Or entity detection. So like, are they talking about GameStop, right? So stuff like that. Or who are the people? So there's a lot of really cool things. So we'll get into what NLP is, how it works. We're not going to get into too much of the theory because I know I have a friend who actually got her PhD in NLP, and this could be, if you're trying to do it from scratch, it could be incredibly difficult. And then the second week, what we're going to be doing is we're going to actually, so in the first part, we're talking about just, kind of the frameworks of how to get a time series forecast model going. really to make it practical, you're going to need to hook it up to some sort of data source. So maybe it's Wall Street Bets, maybe it's Twitter, maybe it's Instagram, maybe it's the news report. I don't know. Everyone could pick their own news feed, right? Whatever feed it might be. Maybe Apoc also has a news feed. You also use that. Doing some sort of sentiment analysis and then getting it all set up. So this is kind of like what week 2 is about. So at the end of the course, you actually have a very thorough, practical, robust project that you can actually probably do pretty accurate predictions on. So let's see if this is done yet. Okay, no, it's still there. Let's see. Let me see here. Let me see if I. Okay, we are good. Okay, guys. Okay, so here we are. Okay, so SNDL random forest. So we ran it for a couple of days. You see this long line here, but this is like, no trading going on. By the way, this is all UTC's time, if people are wondering. So you can see our portfolio value kind of dipped a little bit, but at the end, the stock forecast did pretty good, right? Oh yeah, we have a bunch of metrics over here on the side. So net profit of $81, gross profit, you see gross profit, average profit per trade, median profit, percent of remaining trades. So you see that, there was, if there were more digits here, you would see that very, very little, it's like, it's in the micro sense. That's why you don't see much of a loss, even though percent of remaining trades is 47%. The CAGR is really good, like 705, because this is, just a very short time period. Sharp ratio is okay, so not the greatest, it's okay. Yeah, so anyways, we have all these kind of metrics you could see here. And then
sorry, Greg, I just want to jump in really quickly.
Sure.
Just because when I first heard this from you, CAGR, I'm not sure everyone really fully understands what that means, compound annual growth rate, CAGR. Guys, just to let you know, what that means is that if you were to do this sort of performance every single day for the entire year, you would have made 700% in that entire year, right? So I just want to highlight that in case people don't know what CAGR stands for, because that is definitely an absolutely outstanding return. So I just wanted to highlight that a little bit there.
Yeah. So if you could do this every day, you do pretty well. Let's put it that way, right? So let's look at the trades, right? So so early on, you could see again this stock is only like $1, right? So but you could see that the model was saying sell, right? So it's basically shorting the stock, so short, and then suddenly it thinks you should buy, right? So it's buy, right? So so this is all being done algorithmically. It's all being triggered off of the forecast, that our model has, right? So the model is forecasting, is the stock going to be higher, or is it going to be lower, right? And then what it's doing is it's looking back at this trigger, right? And the trigger saying if it's higher, the stock's going to be higher in the future, buy. If it's going to be lower, sell, right? If it's not going to do it either, beyond this threshold, don't do anything, right? So yeah, so you could see that we said three shares, right? And then we are shorting, so you're gonna need some sort of margin, right? So because what's happening is you're accumulating a fairly large short position, then you're starting to go down, right? You're starting to go long, right? And then here you can see the volume of the trades. So again, this is not necessarily representative of the results you'll get, but this is more of an example to show how it works, right? Yeah, so let me go back to the presentation here. Okay, I went over that kind of fast, so if anyone has questions about it, I could dive into that more depth. Okay, so yeah, so what I did here is kind of showed the machine learning basics, right? Oh, sorry. In the course, we're going to go over the machine learning basics. What is deep learning, building stock market forecasting. So kind of what I went over on the website. In the forecast demo, what I showed you here was, we used a lot of the common technical indicators as features. And then And then we use the random forest model, and then we're forecasting 15 minutes in the future. And then I just showed you guys a training demo in the future with doing a training demo with the forecast. Anon asked a good question here, which is, how can you get an edge? How can we get an edge, if possible, over high frequency trading firms? And they are market makers which employ more sophisticated algo trading. So that's a good question. So just to be clear, there's actually kind of several classes, right? There's high frequency trading, there's like algorithmic trading, and then there's like everyone else, like manual trading, right? So we're not doing a high frequency trading, and Alpaca is not set to do high frequency trading. So high frequency trading is when people are doing like thousands, like you're like Citadel or something like that. You're doing thousands of trades per second, right? That's not us. That's not what we're doing here, right? And that's when you have to have like a server parked right next to the, exchange in New Jersey or something like that, right? That's there's actually a good movie out there where they sort of was stringing a fiber line or something like that through, or with a fiber line or a satellite. I forgot how they did it, but they're trying to get a reduced amount of latency. That's a high capital. That's something totally different. So with augmented trading, so those people typically what they're doing is they're just trying to, whoever could get the information first, and you're kind of front running the market. So with augmented trading, what we're doing here is you have some sort of perspective on maybe you see a pattern. You think you see a pattern in a Reddit subgroup of Wall Street bets, and there's like a ton of postings every single day, right? And you want to use that as a signal to do a trade, right? So that's one example of using it, right? Or you can use it as a way to build a forecasting model to do a trade. So it's not, you're not trying to do high frequency trading. At least most individuals don't have the capital or resources to do something like that. You're doing more algorithm trading, and what you're doing is you are thinking about what are strategies that could make money, but the most strategies out there today, they're not like, it's hard to, like I said, it's hard to find those $100 bills on the ground. You're more likely to find like pennies on the ground. So you want, like in this example I showed you, right? Oops. In the example I just showed you here, right? Oops. In the example here, we're placing a gazillion trades, right? This thing is like, like minus $79. So and we're doing three shares per trade, right? So this is like, and it's $1 something per trade. So this is like, I don't know, 20 trades or something like that. So we're doing lots of trades, right? Over a short period of time. So with algorithmic trading, you could do, this is not high frequency trading. We're not doing 1,000 trades per second, but it's more than you probably could do manually, right? And so what you're able to do is you're able to collect the pennies on the ground, nickels and pennies on the ground, right? I think to hit those home runs, like Warren Buffett, right, where he'll buy Coca-Cola and hold it for 10 years, something like that. Those are like kind of home run, and and the stock will like go up 10x, something like that. Or one show I'm watching right now, I'm not sure if you guys are watching it. It's called Billions, right? So this guy, he's like, he has all this kind of inside information. He's like, making these mega bets, and that's not what's happening here. This one, you're basically collecting up the pennies, right, on the ground, but you're doing it algorithmically, so it actually adds up to a lot, right? That's kind of like what's going on here. And so but you're not doing high frequency trading. You're not trying to front run the market, because that's too hard for individuals to do. And then but basically you are you are using kind of a hunch you have in terms of like, oh well, if this could be a good signal, right? So let's say you're following Tesla a lot as an example, right? And you notice that whenever Elon tweets, the stock behaves a certain way, right? Okay, you can start building a model, right, that would model out his. And I'm making these. I'm not saying these are winning strategies. I'm making this stuff on the fly, right? But maybe you notice a pattern. Maybe every time he does that, the stock goes up, or maybe it goes down, right? So then you build a model for that, right? And then start doing augmented trading. That's what I'm talking about. So you would want to be kind of a subject matter expert in whatever stock you happen to own, and maybe if it's a farming stock, right? Maybe you look at weather patterns, or maybe if it's a car stock, right? Maybe you use the other cars as features for a model, right? So and train a model to see if it could um, uh, predict better than than using the traditional indicators. So kind of like this, what the strategy is here is really, there's stocks or securities you're following or trades that you are doing, and you want to be able to use machine learning, which could handle large amounts of data. So there are patterns which you probably couldn't detect yourself because you probably couldn't look at 100,000 pieces of data. It's probably humanly impossible to do that. But with machine learning, you could do that, right? Machine learning kicks ass in those cases when there's tons of data. But Anand, great question. So keep them coming. Okay, you guys have been asking questions, but here's the time for call out for any additional questions. So any other questions anyone has? How to identify the right stock? That's a good question. So, I mean, just going back to, this is also kind of like why we had this is we have a stock screener, right? So in a stock screener, what we do is you you have your trade your uh, uh, your trading strategy, whatever it might be. And then what you do is you put in a basket of stocks, right? And then what a stock screener would do is it will like run through all of them, right? And that could be kind of computationally intensive, or you could say a certain sector, right? And then you can see which stocks or sectors perform best for this trading strategy, right? So that's how you do it. So some sort of stock screener is common. This is also why you want to do this programmatically, because it's otherwise it's humanly impossible. But very good question, Anand. Thank you. Anyone else have any other questions here?
Greg, while we're waiting for some more people to ask questions,
Sure.
I want to wait a little bit just because sometimes it takes a while for people to be able to type them out. I know we've ended them. Oh, there we go. We got another one here.
Okay. Another question is, do we? I guess I'm not quite sure about the question. We develop entry and exit strategy. Well, okay. Okay. So like I said, there's two pieces to a kind of algorithmic trading. There's the forecast, right? People call them indicators, whatever you want. There's some sort of forecast of what the future is going to be, and then there's the trading strategy. And the trading strategy, an example I showed you earlier, which is a super basic one, right? Which is if it's forecast to be higher, buy. If it's forecast to be lower, sell, right? Oh, actually, someone says that. Can I repeat the questions? Okay, sorry. Okay, I should have read them off. So the question I think is, I'm actually not sure, Robert. Do you know what the question really is asking? We develop entry and exit strategies as well.
Yeah, so I think he's asking about do you develop exit and entry strategies? So I mean, yeah. So like like when do you get in? When do you get out? And
yeah. So that's two parts. Yeah. So there's a forecast, and then there's the entry and exit strategies, right? And so those are what we call triggers, triggering action, right? So it's buying a stock, selling a stock. And then there's many sophisticated ways, like I talked about like martingale, right? Martingale is martingale most people have heard of, which is, let's say you think the stocks can go up and it didn't go up, so you double down, right? And then if stocks, then hopefully, if the stock goes up, you made your money back that you lost earlier, right? So then you keep on doubling, right? And there's like reverse martingale. There's a bunch of strategies out there. So so there's the forecast, and then there's the trigger, and some triggers can be incredibly complex, like reinforcement learning, which is really great for like low float type of stocks, right? When there's like very few people, relatively few people trading on that stock. Like that could be a good strategy as an example. And then Siva asked, are we going to learn to build a platform like Pika that you showed in your demo? So that platform we built took, I don't know, probably like 3 man-years worth of engineering time, maybe more at this point. So no, we're not going to do that in a course. That's way beyond the scope of the course. The course is really to give you guys fundamentals of how to do this, right? Of how to build a forecast model, of how to use news feeds and build a realistic forecast model that can actually make money. But to build a whole platform like Pika would be a humongous undertaking for any individual. So no, that's not the idea. And so that's why we offer Pikas, because sometimes we would build custom training strategy for people, and they find out, oh, I'm running the thing on my home computer, and my someone tripped over the cord and my computer went out. Like, oh my god, right? Disastrous. They want to host in the cloud. They want to have fail safe. They want to have a whole bunch of other stuff. But that's a lot of work, and that's not possible to do in the time for this course. Chris is asking a really good question here, which is, what are some of the high-level differences between the algorithmic training course and the machine learning course? And I think, Robert, you should answer that one.
Yeah, absolutely. I can answer that. So algorithmic trading is really about building the robots. So this is like if you take this algorithmic trading class, you'll be able to build a robot standalone that can buy and sell stocks and do that sort of thing. It's essentially teaching you how to build these robots. It's also a lot more beginner level, right? So if you don't know how to code at all, it's a much easier course to approach, right? It's also 12 weeks long. So there's a lot of, you learn from the beginning of like not knowing how to code at all till the end where you actually are able to build a robot that trades automatically, right? Now, machine learning, what it's teaching you is, first of all, it's a little bit more advanced. So you probably want to know some coding before you go into it. And a lot of people actually, like I said, we've been selling bundles where people buy the algorithmic trading and the machine learning. They'll learn the beginning and then really go into more depth in the machine learning course. Not to say you have to do them one after the other. But the machine learning course is really about building the smarts, right? It's like specific types of strategies, right? So algorithmic trading will teach you, here, I'll turn my camera on here too as well. Sorry, it's because the internet was a little bit off. But basically the algorithmic trading will teach you how to build kind of from scratch, not knowing how to code, build out these trading robots. Whereas the machine learning will teach you how to build like these really complex machine learning strategies, like specific types of strategies that also tend to work really well and really like deliver great returns. Like what you saw, like Greg, I think again, just to repeat these numbers because I think this is astounding. I think your average client makes like 46% a year with very low risk, which is absolutely unbelievable. To be honest with you, Greg, I feel like we need to discuss how we're going to do some sort of investing or relationship or something. But basically machine learning will teach you how to build these like cutting edge type strategies, right? So algorithmic trading is really the basics of building the robots, whereas the machine learning is the more complex strategies that will go into the details, right?
Alejandro asked a question. Is it possible for the robots to share with each other what they learned or work with multiple trained robots? And that answer is absolutely yes, right? I wish there was a magic bullet out there where you just need one strategy, one robot, and it makes money all the time for every single stock. And unfortunately, no such thing exists, because as soon as someone figures this out, like the profit, everyone starts doing it, and the profits kind of like whittled away. So so most people actually have multiple trading robots. That's actually very, very common. And most of these trading robots, you have to keep on, they kind of like do really well, and then they kind of peter out after a while, and you have to kind of, people find out about it. And then not that, people start, there's a lot of smart people out there. So people start figuring out like, the same kind of idea. And so then the profits kind of start dwindling, right? So so you have to kind of keep these models updated and fresh. You have to keep on training them because unfortunately there's just a lot of smart people out there and a lot of people who want to make money. So it's not a one shot, you do it and you can retire for the rest of your life. It's not like that. You do it, you'll make money for a while, and then you'll make less money as time goes on, just because there's a lot of competition out there. And then Anand had another great question here, which is, if there's a sudden big sell-off, like in the past 2 days, the model slash trigger will help informing us to sell. So big sell-offs or like major, like COVID, or like really like things that are more like black swan events, they so you got to think about like how much training, how many big sell-offs have you seen, or how many COVID type of situations have you seen? And this is why I'm very biased about machine learning being more for short term versus long term. So long term, there's all these black swan events will happen. Short term, not as likely. So you got to imagine how many times would that model be able to see that example, right? So, oh, by the way, Robert, I don't know if you're trying to say something, but you're muted. I don't know if you're trying to say something, Robert, but you're muted. Just want to let you know. Okay. But anyways, so everything you have to keep in mind with machine learning is how many examples of that will you see, right? Because the models, unlike humans, where we could get away with like 3 or 4 examples, most machine learning models need a lot of examples in order for them to really get that pattern. And then Scott's asking a question: are we at a point where bots are machine learning the AI? Wait, are we at the point where the bots are machine learning the AI? Wait, actually, Rob, do you understand that question?
I'm sorry, Scott. I don't understand what that means either. I'm trying to make sense of it. Maybe Scott, you can. Is the AI learning the bots of the AI? I mean, I guess one way that I feel like maybe Scott, you could try to explain that a little bit different, but maybe I can try to tackle that a little bit. I think maybe what Scott's asking is whether AI is now competing against other AIs. I'm a little confused as to what exactly the question is, but I mean, the truth is there a way to train the AI that is being implemented and learning from the AI?
Is there a way to train the AI that is being implemented and learning from the AI? Is there a way to train? The machine learning. Oh, it's the machine learning. Actually, maybe what you're talking about, like what I talked about earlier about AutoML, right? So one reason why machine learning has become a lot more accessible is because there's like the base level machine learning, and then what people have done is built like things called AutoML, which is another machine learning on top of the machine learning. So it makes it a lot easier. Instead of tweaking all these little hyperparameters, the machine learning model on top of the machine learning would tweak all the hyperparameters, right? Maybe that's what you're asking, Scott. I'm not sure if that's the question you're asking, but so yeah, so there's machine learning on top of machine learning these days, right?
There's one more here by Chris K in the Q&A.
How much daily monitoring does a machine learning bot require once it's successfully built? Hours per day, week, etc. How much daily monitoring? Well, if the point is you have to sit there watch all the time. Okay, so this is I'm going to treat these for several different ways, but several different reasons. One of the reasons is you can't humanly do it fast enough, or just too monotonous. Like placing a trade every minute, that's pretty hard for a human to do. You could do it, but it's pretty hard, right? So that's one of them, is just the repetition of that. But the thing is, I would not let the machine learning model like run and you sleeping, right? I don't think that's a good idea, right? I would say that you could do other things, but you want to like have your phone handy, right? And that's also why for us we have like a fail safe where if your portfolio drops by a certain percentage or whatever, it will stop everything, right? And send you a message saying, go look at what's going on, right? Because there are black swan events. But so I would say you can fire and forget a little bit, but do it with extreme caution. And you want to be really, really confident. You want to have done a ton of back testing in order to make sure that it's solid, right? It's not But the great thing is once it's solid, it's almost like a printing money. It's kind of cool, right? And I've seen some people do this. Right? It's just kind of like printing money out, but there's a lot of testing, a lot of back testing you have to do. Another good question is how long may it take for a student to program a successful trading bot? How many hours? There's two parts to it. There's the writing of it, and then there's testing. And testing, like I said, like the whole back testing, and then you want to go through paper trading. You want to kind of go through the corner cases. That takes time too. So there's not just the writing of the code. There's also the testing of it, which is I would argue is more important than the writing of it, because if you don't test it well, you could run into trouble. So, um, so from this class, you'll get a basic a basic forecaster that you could actually do something practical with, right? You could feed in certain types of news feeds. So, I would think that through this you could actually get something that's practical and working, and perhaps even making money. But you have to really backtest the heck out of it, right, to make sure. Alberto is asking, do you have any experience developing algos for fixed income products, like bonds? We actually, like for myself, I haven't. Our platform, so fixed income isn't as popular as equities trading or options trading. So we've done some of that as like consulting, but we haven't built that into our platform in terms of Pika, because there's not as much demand. Well, there wasn't as much demand, but if we get a lot of demand, we may put that into Pika as well. But we just mainly so far have just been doing consulting around it, but not. We're looking for if there's enough demand, and same thing with the crypto, right? We've been doing a lot more crypto projects. So this is actually how Pika got started. Was we were doing these custom trading algorithms for people, and then people didn't have a way to host it. There's actually a lot of work to actually host it yourself. A lot of people don't have the cloud engineering type of background to do it. So that's how Pika got formed, was because people like needed a home for their trading strategies. But good question, Alberto.
Okay, so I think that's probably all the questions now. That was good. That was a lot of questions. I thought that was actually great.
Thank you, everyone, for your making it interactive.
Definitely great. So once again, I just want to highlight, if you guys are interested in the course, it starts at the end of March. I also want to just bring up, don't wait until last minute, because our courses have been selling out pretty frequently lately, and we don't want to have too many people in this course. We tend to cap them out at like 20 people because we do want to have a more interactive type of session. So make sure you sign up. If you're interested, you guys can reach out to either myself, Rob at Lumi Wealth. You can reach out to Alicia. We just brought on board another person as well to answer questions, because we're growing quite quickly as a company, which is Yana. So Yana, you guys might be able to speak to as well. Go to lumiwealth.com. You can go, when you scroll down a little bit, read more about the machine learning on the website. It's basically one of the 3 courses there in the middle. And then feel free to book a call. You could obviously purchase from there. And again, we have that package now where you can actually buy the algorithmic trading and the machine learning together. Just in case you're like brand new to coding, you've never done it before. The algo trading will teach you kind of the basics there, how the algo trading stuff works, how pandas works, and all that sort of stuff. And then Greg's course kind of takes you to advanced mode to make the bajillions of dollars that I know you guys all want to make, which is really cool. So again, I just want to say thank you very much to everyone that attended. And obviously, thank you very much to Greg for the presentation. I know your time is very valuable, and always appreciate all the time I spent with you. So thank you very much.
Thank you, Robert. Really appreciate you having me.
Right. Awesome. Okay, guys, have a good night. And good night, Greg.
Bye-bye.